Hi everyone, I am Karan and welcome to Karan's Gyan. Today I'll be talking about number one investment. This is number one investment for people seeking fixed income. This investment is sovereign gold bond. Now, basically, we Indians love gold. In fact, we Indians have the highest amount of per capita gold per person. And the Indian government thought, well, since our citizens hold a lot of gold, why don't we come up with some scheme in which we can utilize the gold that our citizens are holding? So it came up with this gold bond scheme. So this is a gold bond series 4 scheme that is issued at a fixed price of rupees 4852 gram 52 rupees per gram. So if you buy this scheme, you would basically get this scheme for 4802 at 50 rupees discount if you use a digital mode. Again, it is Modi's digitization program that is responsible for this. So 50 rupees discount on the bond if you buy this bond via digital mode. So you can buy it either 1 gram or 4 kg per individual. You can buy it in multiples of 1 gram. For individual, 4 kg is the maximum amount. If you are Hindustan undivided family, sorry, if you are Hindu undivided family or HUF, you can buy up to 20 kgs. So subscription is from 6 July to 10 July. Settlement will be held on 14 July. Now you must be wondering what is this gold bond scheme and who is the issuer. Well, this is a government security that is denominated in grams of gold. This issuer is by RBI, so RBI guarantees it. What is the benefit of buying this gold bond? Well, if you want to buy gold, all right. Suppose you buy gold from in the form of jewelry or in the form of gold bars. You go to your jeweler and you tell him, "See, I want to buy gold," and the jeweler says, "All right, sir, this is the gold price going on, and this will be the making charges over it." And this would be GST, XYZ things over it. All right. So you would basically pay him gold. You'll pay him for the gold that you're buying. You'll be paying it for making charges. You'll be paying him for wastage charges. And you can also be scammed for purity. So there are a lot of problems there. You'll have to come home, store gold maybe in a bank locker. So you have locker fees also, and you there's a risk that your gold can be stolen, and your gold is sitting at home. It is not giving you any running interest. All right, you can only get money from gold once you sell it. And Indians think that buying gold is very good for the household, which I completely agree. This situation of coronavirus has proved that gold is good to be in the house. It's good to have gold in the house. So we'll talk about this SGB and how it overcomes certain problem physical gold has. So it is assured, investors are assured of the market value of the gold, so you don't have to worry that your gold bond will be underpriced. You get periodic interest on the gold, so your gold won't be lying at your home. Basically, you'll get interest for the amount of gold, the amount you have shelled out to buy that gold. All right, the risk and cost of storage is eliminated. It can't be stolen. It is actually issued in demat form, and it is also held on the books of RBI. Hence, if you lose the gold, there's no problem. It's on the books. It's recorded. It's in demat form. It can't be stolen from you. Free from making charges, and no scam in when a purity is into consideration. Hence, it is a superior alternative to holding gold in physical form. So you must be wondering, what is gold bond? What is it exactly? Okay, I get it. It's better than physical holding of bond. Hold on, and there I'll explain everything. So basically, what is the structure of a bond? So structure of a bond is you buy a bond. You suppose you buy a bond for 10 lakh rupees. All right, you'll get interest. You'll get coupon on the bond. Suppose the interest is 10% for 10 years. All right, so it's a 10-year bond, and you'll get interest of 10%. So basically, you've put 1 lakh rupees, 10% interest every year, so 10,000 rupees interest every year for 10 years. And when the bond gets, it comes to maturity, your 1 lakh rupees would be returned back to you. So this is what happens. So what will happen in gold bond is, so on 14th July, if you suppose you buy 10 grams, all right, on 14th July you will buy 10 grams of this bond at 48,020 rupees. We are using digital payment, all right, at 4,802 rupees. We'll get 10 grams, you'll get at 48,020 rupees. So it'll pay you 2.5% interest semi annually. All right, so you'll get interest semi annually. Every annual you'll get like half of 2.5%, which is 1.25%. You'll get 1.25% interest semi annually or 2.5% annually. Right, we're taking an approximation. So you'll get about 600 rupees every 6 months, all right, for 8 years. So basically you'll get 600 rupees as 16 installments, all right. And on the 8th year, that means on 14th July 2028, all right, you would get the last installment or the last payment of interest of 600 rupees, and you'll get 10-gram gold. Now you pay 10-gram gold in cash, you will basically get 10-gram gold back in cash. However, this 10-gram gold, the price of 10-gram gold would be according to the price on 14 July 2028. So it's basically you're holding physical gold, just like holding physical gold for 8 years. Yeah, you're holding physical gold in a secured way, and you're getting interest on the amount you invested. Just so that you know, this 600 rupee interest is fixed. It doesn't matter if tomorrow the price of gold goes down. Okay, it only it is just based on 48,000 rupees. All right, you'll get interest based on the amount you have invested. It doesn't matter what is the spot price of gold tomorrow. However, the amount which you will get after 8 years, it will be the price of gold accordingly. You know, it will be price of gold on 14 July 2028. And seeing how gold prices have been increasing for the past century, I'm sure it would be, of course, higher than the price that is being quoted right now, because gold is a heaven asset. All right. So I would say basically you're getting 20% of the investment, 2.5 into 8. So you're basically getting 20% of your investment amount as interest. All right. And you're also getting the 10-gram gold price on maturity. 10-gram gold price according to 14 July 2028. 8-year bond, right? You got the bond as settlement on 14 July 2020. So 8 years make it 2028. Yeah. And suppose you this is just plain interest. Suppose you put that money which you're getting 600 rupees every 6 months, you're putting in a recurring deposit that gives you 6%. Every recurring deposit gives you 6.5% in India. You'll be able to get 15,000 rupees from the cash flows of 9,600 rupees over the course of 8 years. You can generate 15,000 rupees. So it's a win-win situation from you. You're getting cash flows from the gold you're having. You're able to get the advantage of holding gold for 8 years. All right, you can get an 8-year advantage. Now, we like I said, advantage capital gains with exposure to gold, interest which physical gold doesn't pay, and this gold bond is secured by the government of India. So you can pledge it for a loan. You can get it for you must have heard gold against loans. So they basically they're gold bond against loans also, and they have same interest rate. Right, now the main part, taxation on these bonds. So there's a tax benefit on these bonds. Of course, the government would give an incentive to people who are buying these bonds rather than buying physical gold. All right. So basically, there are no capital gains on maturity or capital gains after 5 years. So basically this bond can be redeemed after 5 years. So after 5 years, whatever is the price of 10-gram gold, you have to pay no capital gain over it. So capital gain is basically the gain you have had on the appreciation of value of the gold. So if the appreciation of the value of gold is 1,000 rupees, capital gains is according to what the tax slab is. Okay, that is the capital gain. For example, if you long term capital gain is about 10%, and short-term capital gain is about 20%. So if if you're selling something for a profit for 2000 rupees after like 3 years, you'll have to pay a capital gain of 200 rupees, whereas in this case if you are redeeming it after 5 years or even at maturity, it's an 8-year bond, so 5 after any time after 5 years you have to pay no capital gains, whereas you'll have to pay capital gains on holding physical gold. However, you need to realize the interest earned would be taxable. So the interest, 600 rupee interest you're earning, that is taxable at your tax slab. Okay. Now, in case you want to sell your gold, all right, there are two ways to sell your gold. You can sell your gold in a secondary market by transferring to someone else. All right, or you can sell it on exchange because it is held electronically also. So you can sell it on an exchange. In that case, you can get short-term capital gains and long-term capital gains. Short-term capital gains, I think so, is 20%. It is when you hold the bond for lesser than 3 years. Long-term capital gains is 10%. In this case, if you hold the bond between 3 to 5 years, because after 5 years there are no capital gains, as I mentioned early redemption. All right, and just so that you know about capital gains, long-term capital gains, long-term capital gains are 10% flat or 20% after indexation. So this is another benefit. What is indexation? So basically, if I see there is inflation going on, so 100 rupees that is worth today, it doesn't give as much buying power as it would give 3 years from now, because as you know, I remember Coca-Cola used to be around 20 rupees a bottle. I used to get Pepsi rupee bottle for 20 rupees, and now it's 40-45 rupees. The value of rupee has drastically decreased. So this is all indexation. You can basically account for the value of rupee lost because of indexation, because of inflation. So basically, there is an inflation benefit also. Generally there is no indexation benefit in most of the asset classes, but there's an indexation benefit in gold bonds. So all these taxpayers, obviously you know these jargons, and you can understand it better than me because I haven't paid a single rupee tax till now. But this is how it is, and I hope you got a good idea about this sovereign gold bond scheme, and maybe I have given you a brief idea about the advantages of investing in this scheme, and maybe motivated you to invest in this gold bond scheme. Because I want you to invest in this gold bond scheme is because it would kind of offset your losses in the share market, because gold bond is something that is the price of gold increases when the price of the shares decrease, because gold is something that people resort to as a heaven. So when the market is choppy, when the market is like there's panic in the market, people shift their money to gold and gold increases. So gold actually balances your portfolio, and having a gold bond in your portfolio is a very very good idea, especially this sovereign gold bond with the interest it's giving. Even though it's 2.5%, at least you're having the benefit of holding gold. It's like benefit of holding gold and getting interest over it. So just have a look on this sovereign gold bond scheme, and if you think you don't have the cash to pay for it right now, well, the government will bring in more schemes, about four more schemes in I think so, three more schemes in the next 3 or 4 months. So it's never too late. All right. I hope you like the video. Have a nice day.